So we definitely got some crazy stuff happening to Senseonics stock again, literally being up now more than 25% since the recent lows, while also sitting on some insane almost 10% jumps just on the last trading day alone. And currently changing hands at about $3.48, we are literally just a few cents away from the recent 150% recoveries after pulling back from the astonishing 1,500% gaps at the beginning of the year. So now with some new key catalysts as well as of course the second quarter earnings released, what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And in the case of Senseonics, we're looking at an especially amongst investors super popular producer of glucose monitoring systems, or CGMs, including some pretty crazy features making testing considerably easier for people with diabetes. But in regard to their stock, there actually are a few crucial aspects that currently need to be considered as they heavily influence the current price, including for example the new earnings report, some big institutional interest and a really solid product line with obviously the insane short squeeze potential we've seen here before. And starting off with the new financials, it quickly becomes apparent that it's definitely going in a good direction here as well. In fact, the company brought in a total of $3.3 million in revenue, including $1 million out of the US and a huge $2.3 million from international sales, also showing the efforts to market their products in for example Europe, which we'll talk about in a second. But coming back to the report, total revenue in 2021 is now expected to fall between a whopping $12 to $15 million, pretty much being on the same level as the $15 million we predicted in our last videos. And with the pretty big cash position of nearly $200 million and debt of only $110 million, this actually seems pretty reasonable. So it might also be one of the biggest reasons for another super important factor that plays a role in basically every single stock's performance, mainly because most of the float is controlled by this institutional trading. And it appears Senseonics actually has sparked a lot of interest from some major investing firms. According to institutional buying data, for example, BlackRock, amongst other investors, has loaded up heavily on the stock. And as this is a big proof of future growth for especially retail traders, mentions forums like Wall Street that skyrocket again as the result. But there are a few other really important things to cover here, with the one thing in particular that certainly sets the company apart from its competition being the Senseonics Eversense XL product. And as we said before, it's pretty much this commercialization of the Eversense XL product that counts here for most investors, with a lot of the promised efforts of the company already showing great results in the new earnings report. But the recent big jumps in price are mostly due to a completely different cause, massive hype, particularly amongst retail traders. In fact, the stock climbed more than 1,500% at the start of the year, on top of the prior 150% recoveries after the initial pullbacks. But, in the end, it was essentially just one factor that enabled all of the surges in the first place: the stock's near-perfect meme stock conditions prior to breaking out. But there's one more really important thing to consider with Senseonics: its devices haven't just sparked investors' interest. So Essentia, a significant competitor in the worldwide diabetic care market, recently partnered up with Senseonics and has now been revealed to take over the company's full commercial activities. They also decided to distribute the Eversense XL product throughout Europe, opening up a massive new market with a lot of potential for the, according to its website, world's first long-term implantable glucose monitoring system, capable of staying in place for more than 3 months, a significant improvement over the customary 14 days. So in light of this, as well as the recently reported earnings, Senseonics has a bright future, particularly in the rapidly rising diabetes market. Alright, if you liked this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot, and see you next time.